U.S. markets are closed for the 4th of July holiday, but let's get some perspective right now on the recent rally that we've seen and whether Brexit fears were overdone with Barometer Capital Management's head of trading, Diana Avigdor. Diana, good to be with you today. Thanks so much for joining us. And I guess the question for so many people really right now is, Brexit, is it one and done, or is there more to come?
You know, Brexit is probably more of a political long-term issue than an economic near-term issue. But you and I spoke before Brexit, and you had a great question. Is the market really pricing this in? It doesn't. We were talking; it wasn't pricing anything in, and then we got a great surprise. Correct?
Yes.
Right.
Yeah.
So the market sold off fantastically, but then rallied back real seriously. And I just want to highlight to people that there is different strategies out there in the market, and the volatility over the short term, especially as it relates to macro, is so much more heightened than it was before. First of all, there's very little possibility of real diversification when you have a macro risk like this, because everything correlates to one. Everything goes at the same time. So you could have been in the U.S., Europe, and so forth. Yes, European financials were worse than some U.S. Sectors, but everything goes down and up together. Systematic trading strategies kind of hit the market on a portfolio basis, and you've seen this kind of sell-off and big rally. We talked that the fundamental equity investors are not really reactive right away. They take a little bit more time on the fundamental basis to enter the market, and they weren't very well exposed before that.
Hey, Diana, Catherine and I were talking earlier about how important the short-term money flows are in the market. And you're on the trading desk, you sort of see the flows. What have you seen in terms of the moves over the past couple of months from domestic and foreign investors, in particular with regards to areas like gold, energy, and then financials as well? Are you seeing a big pickup, or what have you seen in net flows?
Yes, we have mentioned this before. There has been major flows into Canada as energy and materials have started to act better. We have had reports from all the major bank trading desks that a lot of the orders are coming from outside money. We have seen global bulge bracket dealers also come in to Canadian equity holders and bidding for stock in these sectors. And certainly with the financials, our financials are less caught in the crosshairs as, say, the U.S. or European financials are. So there has been some advantage, and I don't know what came first, chicken or the egg, but the Canadian dollar is also very helpful to the foreign investors. As the commodity trade works, the Canadian dollar plus the equity exposure really helps these international investors. But from a portfolio perspective, what I mentioned before from the risk portfolio trading perspective, you can see as you sit on the trading desk that over the sell-off and the rally, it has been major programs that have been trading the market, and the volume has been pretty big, but it hasn't been single stock, relatively normal trading as you see. You just see 1,000 names and 1,500 names all of a sudden either to buy or to sell.
Well, this is important for viewers to understand program trading and what it might mean. What do you think it means in terms of what you're actually seeing, these program trades? So big money managers really wanting to execute on certain positions. What are they doing? Are they having to sell? That's what I'm assuming, but what are you thinking this program trading is stemming from?
Yeah, I'm actually referring to systematic trading strategies that are very, very mathematically driven.
Okay, so quant funds.
Yeah, well, there is different kind of quant. You can say that, fundamental investors that look for 5 different metrics and discipline that way, they could be quasi-quant as well. I am talking about very specific mathematical formulas. Say, implied volatility, realized volatility has not actually equal to what they were calculated, and so the exposure is now mathematically overdone, so they need to take down portfolio exposure by, say, 20%. They run a program, there's 1,500 names, boom, it's automatically sent to the market in an electronic way. As we know, there's no humans on actual physical trading floors anymore. It does not create a human judgment out there. And so what I'm saying is it's somewhat of an opportunity for us real fundamental investors that are active, because these sellers or buyers, they are not price sensitive. They're spread sensitive, they're beta sensitive, they're all kinds of other metrics sensitive that are mathematically spit out, but they're not price sensitive to what the impact is on, say, a stock like GE or Barrick or Royal or whatever the fundamental stock is. So prices can move quite substantially because they're part of a 1,500 name program. And you as an investor or a trader, if you're savvy, sitting on the desk, and this is part of what we do for our clients. We do this full time, sitting and looking at their portfolios and stocks. It's different than just picking any price, but you see these moves in the market, and you can pick up some stocks that you like at very opportune prices, or sell them at prices that are really off.
Diana, the big move for the Canadian market so far this year has been the golds, and people generally tend to be underweight. Now it's about 8% of the index weight. At Barometer, what have you guys been doing with the golds? How are you positioned? How do you see them in here? It's always a tough story fundamentally.
Yeah, that's very true. It is, of course, interesting what happened with the gold. I'm sure you noticed the U.S. dollar and gold negative correlation has sort of is a bit off. So you can see that there is demand for gold, despite it's not just a currency trade. It's really just a risk on, and plus it's a technical move as well. The price action begets more price action. From our perspective, in the equity portfolios, there is decent weight in materials, which includes gold. In the income portfolios, most gold companies don't pay a dividend, but Franco-Nevada, for example, a royalty company, it is one of our larger holdings. So we diversified on the income side. For example, we've barbelled the portfolio for a cyclical and a safety trade. And the cyclical would be energy, commodity, gold. And the safety for income, utilities and so forth, that provide the only kind of yield you can find in the market, really.
All right, Diana, great to see you. Thanks so much for
Thanks
joining
for
us.
having me.
Thank you.